Hello traders, hello everyone, my name is Horvat and welcome to a new video surfing the Elliott waves, where I'll look some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the euro dollar, New Zealand dollar, dollar yen, S&P 500 and quick look at NZD 100 and then also crude oil. Now this video will be, at least start of the video will be a little bit of different. I just want to bring attention to an important wave structures, how to recognize the clear patterns. So always when market is let's say in a strong uptrend, like been here on the euro dollar recently, and then you see a pause. Okay, now the key component is to figure out if this reversal is putting a top in place right here, or is just a temporary pause and that market will resume higher. So this reversal potential uptrend continuation can be identified by two important characteristics. Firstly, you have to see an overlapping or corrective decline within this pullback to make sure that reversal from the highs is not impulsive. Then the next important thing is that you see after this corrective pause that you see a resumption or bounce in 5 waves, because only 5 waves can then confirm then that this was a completed correction and that uptrend is ready to resume, even if this is just for another 3-wave structure or maybe higher degree new 5-wave pattern. So if we look here on the euro dollar, what we can see is that this rise, okay, from these lows to current levels can be clearly counted as an impulsive price action. Why? Because it's a sharp move with no overlaps between these subwaves or corrections in the middle of this recovery. So I believe this is an impulse. So this is the first component that actually suggests that yes, uptrend may resume. And if we look also then back at the higher time frame here from January highs, then we can actually see that this whole decline can be counted as a complex correction. Why? Because there were overlaps. Okay, there's also a leading diagonal as an alternate scenario, but even this one suggests that we will see more upside. So based on overlapping decline, based on a strong impulsive bounce, well, we have two components that suggest that euro dollar is probably back in a recovery mode, and ideally we'll see more upside. So when it comes to trading, you really want to look, at least if you are a short-term trader, you want to look in the direction of these impulses. So what you would do is probably wait on a corrective setbacks. Well, I see this as a wave A, maybe wave 1, meaning we are expecting wave 2 or wave B pullback. In normal circumstances or textbooks patterns, you will see a retracement back to the area of a former wave 4. So the first support would be definitely at 1.1940, followed by even this one deeper at 1860, and of course I would pay attention to this trend line as well. So I think that euro dollar is in uptrend, we'll see more upside, but it's a little bit high based on short-term swings. I mean, if we are here completing this 5-wave structure for wave A or wave 1 and we are expecting a pullback, then I think it's much better to wait on this pullback and look for potential entries from lower support levels rather than hunting new entries here at the highs. Of course, invalidation level, as we know, is here at the swing lows from March, because if this was a 5-wave rise and if this was the beginning of a new trend, then obviously this rise should not be fully retraced. Now let's take a look also on New Zealand dollar. New Zealand dollar also made a very nice bounce recently. What we are looking firstly on a daily chart is an incomplete 5-wave sequence that can take us back to the highs here of 2021. Why? Because the drop here was made by 3 waves. We have seen a pullback of 50% compared to wave 2. The ideal would be 38.2 compared to wave 3, not wave 2. The ideal would be the 38.2%, but because wave 1 was quite similar compared to wave 3 was quite similar compared to wave 1, that's why actually we have seen a little bit deeper retracement here. But still, this FIBS caused a reversal, and looks like that this reversal is pointing to even more upside, because we can see price moving out of this downward channel. Also, if I add this base channel technique, then you can actually see that not only we've seen a break out of this downward channel, but also we are accelerating, since we have seen a break out of a bullish channel, a base channel. So this means that price is actually accelerating when you have price moving out of a bullish channel in uptrend, right? So I believe that this can be a personality for an impulsive price action once more, and meaning that more upside could be seen after retracement. Now the resistance in the short term could be at 72.70, where could slow down ideally for this another intraday free wave drop, and then this could be an opportunity to look for more upside here. Now let's take a look also on dollar yen. Now dollar yen has made a quite sharp drop, I must admit here, but still it can be wave 4. We are now at 107.50 supports here, and also you have this trend line that is not far away. So in my opinion, still this can be seen as a sharp correction. Okay, so what I'm seeing here on the 4-hour chart is actually a free wave drop. There was also wave C that equals to wave A around that 108 level, and if we can see more upside in the next 24-48 hours with a daily close out of this downward channel, then I think that more upside could be here, at least towards 110 area. I have another alternate scenario in my mind where I would label this decline as a 5-wave movement. I know that this sometimes can be confusing, but even if this would be bearish and you see a very strong bounce in 5 waves, as I said, above 109 level, then there can still be room for more upside after this pullback, even if this would be an A, B, C structure. Okay, so I think the dollar yen is facing some very interesting support levels for the current price development. And now let's take a look also on stocks. Now the S&P 500 is coming to the downside out of this downward channel. So it looks like that the 5-wave rise that we've been tracking for the past month or so is now coming to an end. So it's nothing to be afraid of. I mean, pullbacks will always occur. So even if you're bullish on stocks, I think that this could again be just another corrective pullback, but it can be a little bit deeper. Now the support area that you should pay attention on is definitely here at the former wave 4, and maybe even at the wave 4 of 2 lesser degrees around 4070. Okay, so these are the levels where I would be looking for potential next bounce back towards the highs, especially if I will see a free wave drop, meaning a corrective characteristics from the highs. Looking here at the NZD 100, this one is also making some nice reversal to the downside. This has been expected based on recent price developments. We have seen a 5-wave rise here, potentially even an ending diagonal here for a wave 5. So this retracement that we are seeing is something normal. Support again at the former wave 4 and wave 4 of 2 lesser degrees right there. Okay, and that's where we should see price or current bearish momentum to stabilize. And now finally, let's take a look on crude oil. Now crude oil is turning to the upside. We have seen a break or acceleration after a push above $61 per barrel, but despite very nice and strong recovery here, I think that we should be very careful if we are expecting more upside. Why? Because the previous drop from March highs can be counted in 5 waves, while the current move is only in 3 waves. In fact, we have seen move out of a triangle. So even if you would say that we are here making a bullish impulse, well, then wave 2 would be invalidated here, not the correct labeling, because triangles can never occur in a wave 2. In fact, triangles occur prior to the final move within current trend. So I'm talking about this trend right from that point towards current levels. So we have seen this final push out of a triangle, meaning that we could expect a reversal here. If we see a drop in the daily close below 62.40 and then even potentially drop below 60.70, that would be a very important bearish trigger for more weakness here into wave C. If we look at the daily chart here to give you the full perspective, well, we have something similar going on right now here away from recent swing lows. Similar patterns like we have seen here in September and through October in 2020. It was also seen as a wave B. So maybe we could see something similar here and then we are bouncing higher. Of course, I'm bullish crude oil, no doubt, but I just think that there can be much better opportunities if you wait a little bit more for this correction to unfold. Because I think that if this is wave 4, it's a little bit too soon to say that this wave 4 is completed here. Normally wave 4 are longer, maybe even more complex compared to wave 2. So it will be very interesting to see if these current resistance levels at 64 and $65 will really cap the upside here. Traders, thank you very much for your attention. I hope that you enjoyed this video, and again, talk to you next week. Bye.